So welcome to Financial Accounting, and we are here to do an introductory session. So we want to understand what is accounting, okay? So accountants in organizations are usually people that have the role of being able to put together information, okay? And through this putting together information, we have the first step of the identify the information. For example, a transaction has happened. Maybe Samuel has purchased goods from the company. That is identifying. And then measuring. Measuring means we go ahead to identify how much has Samuel purchased. And we're able to combine all those transactions for Samuel and be able to have a report to management of set the total, maybe the total sales of the organization or the total purchases of the organization and so on. So in simple terms, accounting is the process of identifying, measuring, communicating economic information about an entity. It is very good for you to take note of the word information. There are two things that we have. We have what you call data and information. Data is any kind of numbers. Samuel purchased, John purchased, Helen purchased, but later returned. Tom purchased but didn't pay. All that is data. But information is transformed data. Information is something that somebody can use to make key decisions. So accountants provide information which management can use to make key decisions. So how is that different from bookkeeping? Now, bookkeeping is the day-to-day recording of transactions. When a customer comes and purchases goods from the organization, we record something within our sales day book, if they are sales on credit, or we record items within our cash book if they have paid us cash. We go ahead to record transactions, maybe whether we are doing invoices for these customers. And after we have done that, we can go ahead to, even summarize this information, okay? Or transactions. So bookkeeping comes first before financial accounting. And for my friends that are already practicing, who are already in the practice of financial accounting, either you're an accountant, you understand that very well at a time like this, you basically do both. You do the bookkeeping. Usually it is the account assistants that do that first bookkeeping. Then now the finance managers and the senior accountants go on to even make, for example, they prepare the financial statements and so on. But at the end of the paper, as we study, you have the confidence and ability to be able to prepare these financial statements, okay? So that is very important. All right. So with that in mind, we also need to understand that accounting has different branches. Accounting has different branches. So we have different branches, and we have financial accounting as one of those branches of accounting. And then we have cost accounting. Now, I'll start with financial accounting. Financial accounting is to do with preparation of financial statements. And right now, I believe that you know what financial statements are. The first financial statement we have is the statement of financial position, which people call the balance sheet, but it is the statement of financial position. Then we have the statement of comprehensive income, which is also called the income statement. Okay. Now, not only those, we have others like the statement of cash flows. And then we have the statement of changes in equity. The notes to account, okay? And of course, you also need to understand that these financial statements are prepared for different reasons, okay? These financial statements are prepared for different reasons. The statement of financial position is prepared to help us understand the liabilities, the assets, and the equity of an entity at that period. Well, the income statement, which is a statement of comprehensive income, helps us to understand the revenue, the expenditure, and whether an entity has made a profit or loss. So it's very important. And then the cash flow statement helps us to understand the cash inflow and cash outflows that have happened in the business. We'll be able to understand how every financial statement looks like, but also what content is actually there. But it's just to give you an understanding. So that's what financial accounting is. A lot to do with preparation of financial statements. And then we have what we now also call the cost accounting. We have the cost accounting. Now, cost accounting, and of course the accountants that do cost accounting are usually called cost accountants. They're usually called cost accountants. Their interest is in the interest of the cost accountants is in the costs. You know, every business incurs costs, just like you on your CPA journey, you're incurring a cost. The cost of attending this class is a cost to you. In the same way, businesses incur costs in delivering services to customers or delivering products to their customers. So the cost accountants analyze to understand how much have we incurred in terms of costs to our in serving our customers. So that's what cost accountants are involved in. So cost accounting deals with the analysis of costs that have been incurred by the business in terms of fixed and variable costs. Okay. Fixed costs are costs that don't change with change in output. For example, a gentleman in Chikubo who runs a shop, their rent is fixed. It does not change by how much the cartons they have sold. But when it comes to other costs like the price, the cost of the cartons, the cost of labor is dependent on how many cartons he has sold, because delivery to customers in terms of delivery costs will vary depending on the number of cartons. So the delivery costs and so on will be variable costs. Well, things like rent will be fixed costs. So cost accountants go into those details. Then we have our friends who are called the management accountants. Now, the management accountants help us to transform the management accountants, help us transform the financial accounting. They help us transform financial accounting into reports that can be understood by our managers. That can be understood by our managers. Now, who are other managers that we are concerned with? The concerned managers here are the non-finance managers. The managers like marketing managers, production managers, the CEO, and so on. These are people who want to make decisions, but they make these decisions based on the results that have been provided by management accountants. One of the papers that you'll be doing on this course is cost and management accounting. If at all you were not exempted such a paper, but if you're exempted, again, you find a very similar paper, which is called Management Decision and Control, which looks at the role of a management accountant. But from today, understand that management accountants, to transform the financial accounting information, basically the information that is provided by the financial accountants, into management accounting reports to be used by management to make decisions. So they simplify the terms. These financial reports should have things like maybe assets, liabilities, and so on. So there are people who totally are not friendly with such terms. So the management accountants come in to simplify things, to even present information and say, what does it mean for us to have only 2 million of cash on our accounts? Does it mean we are more liquid? Or does it mean that we need to take action, either get a loan or liquidate some of our assets to be able to survive? So the management accountants even go ahead to provide such information, okay? So very, very important for you to understand the different branches of accounting. We have other branches like tax accountants. I think you've had some organizations recruiting tax accountants. So that would be another field that to look at. But for now, those could be aspects that you really need to know. So after that, we need to, I believe that right now you can distinguish between bookkeeping and financial accounting, okay? Like we said, bookkeeping is just about the recording and summarizing business transactions. Well, accounting is now the process, is a systematic process of identifying, measuring, and communicating economic information about an entity to different users for decision making, okay? Now, before we even proceed, I want to comment about something here. The definition of accounting, I can even just show it on my screen here, has a key term This key term is different users of financial information. Okay, it's one of the areas that we are going to look at, but it's very good for you to know that they are users of accounting information. Okay, they are users of accounting information, and the users include management who runs the organizations. It also includes the investors, the shareholders. It includes the banks that lend to companies. It also goes on to include government who do the regulatory role and so on. So you need to understand how each of these come into play. Okay, so very important right there to understand how each of these come through. So we've also tried to understand management accountants. We've understood what a management accountant does. But it's also very important to have an understanding. When you move to through these notes, there's this important aspect of the difference between financial accounting and management accounting. Okay, I already said that one of the other comes after. Okay, one of the other comes after the other, and I say that management accounting is a result of financial accounting. And what exactly happens is that we have to have information from financial accountants before we can prepare the management reports. Now, financial accounting aims at preparing financial statements. And these financial statements mainly focus on external users. I think you've opened newspapers and you have seen financial statements of banks in one or the other. Either it's a bank, either it's a listed company like Umeme. You see these financial statements within the newspapers. They are focusing on the external person. Management accounting reports are totally different because for them, they are focusing on the internal people, the management. And the reason why we said we prepare these reports is that management wants to make decisions. So they want to get information to help them make informed decisions. Okay, so that is very important to take note of. Financial accounting, as we shall proceed, financial accounting follows a given framework. We have what we call the financial reporting framework. And what does this mean? You'll find that the financial statements of Bank A, Stanbic, have, in terms of appearance, they have a similar look to how the financial statements of Centenary look like. Okay, in terms of how they are structured, okay, and the rules that the different people that prepare these financial statements follow are very similar. Okay, so we have these rules called the General Accounting Principles. We have the International Accounting Standards, IAS, and then we have the International Financial Reporting Standards, IFRS. So financial accounting follows these different reporting framework requirements. Now, management accounting, when we are preparing reports for management, they don't have rules. What are the rules? We basically don't have mandatory rules, but the intention of management reports is to help management make decisions. So we tailor reports based on how best we think management will make sense of the reports to support them making decisions. So that is very important. And then the other is the objective, okay? The objective. Like we said, financial accounting is for external users. So its key information is to support decisions like financing. Banks want to find out how the business is performing. So it's through this information that they know that your business is worthy to be financed. Investors are interested in the same. Dividend decisions, these are the shareholders. They want to know how much profit you have made for you to be able to give them dividends, okay? And then we have, of course, different other users. But when it comes to management accounting, for it is focusing on internal use, management, and you'll find that it embeds financial and non-financial information. Why it embeds these two is because management does not just make decisions based on only on financial information. You know, a business can be profitable today, but it is going to be in losses next year. Some of you that follow technology, you understand that Google is one of the, one of the profitable companies we have in our generation. They generate a lot of money. But recently, we've started seeing reports that show that artificial intelligence is going to take over, is likely to take over the business of Google because of the change in technology. So although the financial information may show that this is a business worthy it, management accountants also provide the non-financial information for management to make decisions that are informed and are inclusive. We saw how companies like Nokia went off the market. At that time, they were making money. So if the managers, based on only financial information, they made mistakes. So management accounting is inclusive, looks at qualitative and quantitative, which is also the same thing as financial and non-financial. The other difference is on where this information, what focus is it looking at? Financial accounting is historically oriented. Why? It looks at the past performance. If we are preparing an income statement, we are preparing an income statement for the period ended. So we are looking at the end of the year. If it is a balance sheet, we are looking at as at the end of the year. And the source of our information is based on what has happened in the past. Now, that is totally different when it comes to management accounting. Management accounting is looking at the future. Why? Because management is to make decisions. And these decisions, their impact is in the future. It's not in the past. It is in the future. So that is how you distinguish between the two. And you see what I'm providing to you here. The examiner can set this exactly and say, explain the differences between financial accounting and management accounting. And it says 10 marks. And then you have to go through each of these factors and differentiate between the two concepts. And then we have provides information about the whole firm. Financial accounting will look at the whole firm because if it's a statement of financial position, it will look at all assets, not exclude any, look at all liabilities, look at all equity. If it is an income statement, it will look at all revenues for the period. It will go ahead to look at all, say, expenses for the period. And the profit or loss that it provides to you will be for the overall business. Management accounting just looks at a section of the business where management wants to make decisions, okay? Just the section of the business where management wants to make decision. So that is what we have. And then, of course, lastly, financial accounting is more specific, self-contained, because we have a framework which we use to report, and the framework is composed of these different rules. Management accounting is limitless, is much broad, multidisciplinary. We are now speaking about technology advancement and so on, which you will not find in financial accounting, okay? So I wanted to comment basically on these differences. I know, of course, the course outline brings up these differences as well. So very good for you to understand. So at a point in time like this, I believe that all of us now understand the differences between each of these and can easily explain what they relate to, okay? Please, if you're watching this as a live session, don't be afraid to ask a question. I'll be able to answer accordingly. If you're watching a recording, please use our WhatsApp group to ask a question, and we shall be able to help you accordingly, okay? We shall be able to help you accordingly. So the next thing here that we have now is the Accounting Act. The Accounting Act. Now, I want you to know that as a country, Uganda, we have an act that governs our operation as accountants, okay? We have an act that governs our operations as accountants in this country. And that act is one that says that an accountant is one who has completed the Certified Public Accountants course. So you cannot call yourself an accountant if you have not finished CPA. So friends, this is how our Accounting Act of Uganda. So the reason why we introduce this at this level is for you to understand that there is what governs your operation. And this is the same act that gives the Institute of Certified Public Accountants the mandate to perform its duties, okay? So as you can see, it has everything: membership to the institute, the council, the Public Accounts Examination Board, function of examination board, everything. Your exams are governed by an act, okay? So it's very important that you try to get time and go through this act, okay? But for us to, for reasons of this, we want to understand, what does the act say about an accountant, okay? The act is saying that an accountant means a person who is enrolled as a member of the institute in accordance with this act. An accountant means a person who is enrolled as a member of the institute in accordance with this act. That is an accountant. Now, there's a keyword here, member. Now, this again has a definition of who can become a member. As you can see, the institute has the following categories of members. We have people we call full members. We have people who we call associate members. Full members, these are members that finish CPA and have the required number of years of experience to attain membership. Associate members, these are people who, when you finish your CPA and you don't have the required number of years, you automatically become an associate member. Retired members, of course, members that have already been able to retire. And then other categories of members that may be determined by the council, okay? The council is a body that is voted by the members. So a person is eligible for membership. A, passes the CPA conducted by the examination board and completes the practical training prescribed by the council. Right now, it has now increased to about 3 years. And I encourage you that as you start your CPA journey, you can be able to register for the practical experience training so that you can track your experience. By the time you graduate, you have your 3 years experience and you can be able to get your membership. There are benefits of being a member. And of course, even in the job market, you find some jobs that will say somebody should be a member, okay? So you'll be able to find this more here. Are we together? And then we have what we call the International Federation of Accountants. So again, as accountants of Uganda, we don't just operate, okay? We don't just operate, but we operate benchmarking on the International Federation of Accountants, the body which regulates accountants at a higher level, okay? You can be able to find more information about the International Federation of Accountants on their website, okay? I'll just share their website here for you to be able to read what is the body, what does it do, okay? You'll be able to appreciate all these, okay? As you can see, they're basically a member organization. So ISPAO is a member of the International Federation of Accountants. I know sometimes people usually say, if I do CPA, am I international? Like somebody who has done ACCA. Now, this gives you an understanding that there is affiliation. Even the local CPA here is affiliated to an international body, which is called IFAC. So it helps us with understanding exactly what we should be able to do, okay? So somebody again goes on to ask, how can somebody register, okay? How can somebody register to be register for practical training right now. Now, that would be another conversation of another day. But the first thing you should do is to register as a student. Okay. When you register as a student, you gain access to the iSPAO website, where you can be able to log in and apply for membership. Okay. You can be able to log in and apply for membership. Those that attended last class, I tried to show you how the iSPAO website looks like, what you usually use, but I can be able to just show you something small. So on this website, so there is when you're full student, you can easily be able to log in. So we have a portal where you can log in with your student number. Okay, with your student number, and log in with, again, your password, and you now get to the system that has everything. So there is registration for PET. When you scroll down, just on the home, we have this that is called practical experience training. Okay. So iSPAO shared some guidelines of what to do, but you can find a guideline here, click on it, and be able to apply and start filling in. It will ask you for somebody who is your mentor, fill in, and then you start tracking your experience. That is another thing for another day, but just I saw somebody who asked about that, and I felt like I should just comment about it. So take your time to find more about that. Okay. All right. So we also need to understand that accountants are drivers of sustainable growth or success of an organization. Okay. And what exactly they try to mean here is that as accountants, what is our role? And how does that role help an organization to succeed? Okay. We have seen the definition of an accountant. Okay. We've also seen other branches of accounting. So from there, you can be able to explain and present your case that an accountant is a driver of sustainable organizational success. And some of the reasons to justify that are reasons around the information we provide, the support we provide in terms of budgeting, in terms of managing taxes and other statutory payments, the support we provide in providing management with information that can help them make key decisions and informed decisions that could take the organization to another level. We are like watchdogs. Accountants are like watchdogs, trying to see what is the next risk within the organization that needs to be dealt with. So because we are watchdogs, we help the organization realize some of its challenges or its risks before it can actually do what? Before it can lose either market or whatever it might be, okay? So it's very important that we understand that. All right. So understanding the role of accountant in organizational success and so on is very, very critical. Of course, as accountants, we also provide assurance services. I don't know if you've heard about this word, assurance services, but this is the work that auditors do. I work with an audit firm, and our work is around assurance, okay? We are independent people, independent professionals that provide services that help give a position, an independent position, to other users of financial information about how the organization is running. So it's basically entails review of financial statements, transactions, and provide that independent position to the users of financial information. If you have read audited books of accounts, you will always see that statement that the financial statements show a true and fair position, okay, of the performance of the organization. So that's what happens. So as accountants, we are required to be independent and demonstrate independence in providing such assurance services, okay? So very important. Then the other are the fundamental ethical principles of professional accountants. Now, in helping or providing information, helping businesses remain sustainable and succeed, there are certain principles that we must uphold. There are certain principles that we must uphold as accountants, okay? So I wish to say that similar to the IFAC, which was International Federation of Accountants, we have a body which is called, the International Ethics Standards Board for Accountants. The International Ethics Standards Board of Accountants, okay? And what you can do, you can always, again, find this information online, interest yourself as an accountant, you'll be able to interface it as we proceed. So this body is called the International Ethics Standards Board for Accountants. And its responsibility is to set highly quality international appropriate ethics standards for professional accountants, including auditor independence requirements. Now, friends, as you start your CPA journey, auditors are not separated from accountants. Actually, auditors are accountants. Like introduced earlier on, I work for an accounting firm, which is regulated by the Certified Public Accountants Institute of Uganda. And most of our work is auditing, but we are accountants that perform the auditing work. So this ethics body also goes ahead to provide what we call the independent auditor requirements, okay? So whenever they ask and say, what are the different codes, ethical codes, fundamental ethical principles for professional accountants? This is the body that provides. And when you go to their websites, you even be able to see they have this code, okay? I'll just share a copy here since it's already here. It's a handbook. When you register for iSPAO, iSPAO usually gets some codes. It basically does an extract out of this document. It does an extract out of this document and gives you a short handbook. They used to give us those short handbooks, because this is over 179, but you don't need all these, okay? You don't need all this. All you need are these, okay? This is just the summary. So in 2005, the ACCA International Ethics Standards Board of Accountants, which was formerly the Ethics Committee, issued what we call the Codes of Ethics for Professional Accountants. And this presents 5 fundamental ethical principles, okay? The examiner can ask you and say, explain 5 fundamental ethical principles. You'll find this within your notes, but I'm just trying to take time to show you the source of this information. So the first we have here is integrity. As an accountant, you should demonstrate integrity. I think we've had, through your journey as an aspiring accountant, you've had many cases where accountants have committed fraud, have committed corruption, and have not demonstrated high levels of integrity in their work. Now, as a professional accountant, you should be straightforward, honest in all your dealings. If you say that a business made 20 million shillings in this period, it should be 20 million shillings and not 200 million shillings. If you're not honest, you risk the intervention of the law. Remember, as accountants, we are governed by an act, okay? We have the Accounting Act. And the Accounting Act, Accountants Act, gives iSPAO a mandate to deregister us where we fail to be compliant with the requirements of these ethical principles, okay? So it's very important that you maintain. So integrity is one of them. Objectivity is the other, where we are saying that a professional accountant should not allow bias, conflict of interest, or undue influence of others, okay? objectivity, whatever you give should not have bias, okay? Where you have conflict of interest, you declare. For example, if you're recruiting for an accounts assistant and you're the accountant and your girlfriend or sister applies, you should be able to declare conflict of interest and say, guys, this one is my sister, so I cannot sit on the panel. Conflict of interest also entails if you're doing a procurement and you know that the supplier of those goods is your mother, you should come out and declare and say, I'm conflicted. My mother is the owner of that business. That is what declaration means. And you should not do things out of influence of others. You should not do things because the CEO said you should do. As an accountant, you should be objective. Then we have the professional competence and due care, which says that as accountants, we should maintain professional knowledge and skill at a required level to ensure that we provide competent professional services based on the current developments in practice, legislation, and techniques. Friends, this is the requirement that makes us have the CPA course the way it is. And it is the requirement why we continuously have a revised syllabus. Why? Because we want to ensure that we are training accountants on the latest developments in practice, not outdated information. The legislation, one of the papers that you do on this CPA course is taxation, and we have taxation and advanced taxation. The law of taxation continues to change. We also do business law, and it's also a paper that keeps changing. Even when you get notes of taxation this year, you cannot use them for the next year, because there will be changes, because every year there are tax amendments, okay? So accountants should ensure that they continuously maintain professional knowledge and skills, okay? And then an accountant should act diligently, and in accordance with the applicable technical and professional standards when providing professional services, okay? The word professional services is speaking especially to the accounting firms, like the firm I work for, which provides professional services, provides services around auditing, services around advisory, services around taxes, and so on, okay? That is the professional competence and due care. And then we have confidentiality. We have confidentiality. Now, as accountants, we are people that have access to information that not any other person can have. You have access to salaries. You have access to shares, whatever dividends they are going to issue out. You even have access to what the company is yet to sell, even people who are yet to be chased from the company. Sometimes you have access to such information. So you have access to confidential, even you have access to information, private information of people. As an accountant, if you're an accountant and you're in the bank, you are aware of how much money Samuel Ibanda has on their bank account, which is confidential information to me because it's information I may not want everyone to know because of my privacy. You even know how much the CEO earns. I've been in one organization before where the admin forgot and shared the payroll with everyone in the organization. And that caused a lot of havoc because everyone was wondering, people earn such a lot of money. The people that work hard are people who are earning low incomes of money. So such information is confidential. So as an accountant, you're required to maintain high levels of confidentiality, and not disclose any information to a third party. A third party is like an outsider, anyone else who is not part of the transaction, without proper and specific authority, unless there is a legal or professional requirement or duty to disclose. Now, as you proceed your journey, especially when you're doing auditing and professional ethics, you get to understand that there are cases where we are required as accountants to declare where we see some issues in the financial information. For example, if I go and audit a company that deals in terrorism, and I'm able to get access such information, I'm required to inform the relevant authorities about this information, okay? So that is a rare case, okay? So unless you're required by the law to provide that information, you should never just provide confidential information to anyone, okay? So that is very important. Confidentiality is very key. Even if you know how much everyone in the organization earns, keep it to yourself, because the law requires you. And this is not only when you become a member, even when you're a student and you commit, you basically do things that are contrary to this code, ISPAL can put an action to you. Maybe they may even stop you from studying because you're studying, but you're already doing shoddy work, okay? So it's very important. And then we have the last one, which is called professional behavior. Professional behavior says the professional accountant should comply with relevant laws and regulations and avoid any action that discredits the profession. A professional accountant should comply with the relevant laws and regulations and should avoid any action that discredits the profession. Some of you that have been around for some time, you know that we've had some accountants in this country whose professional certificates have been withheld or withdrawn from them, okay? Because they did actions that discredit the accountant's profession. You've heard of names like Kazinda, names like Jamwa, and other people who from judgment it has been found out that they did acts that discredit. So if you do anything like that as you will no longer call you certified public accountant because you have discredited the profession. So those are the ones. I believe that right now you can easily remember some of them and you can easily apply accordingly to yourself as an accountant or as a CPA student, okay? Like I said, you're not yet, unless you finish CPA, you cannot call yourself an accountant by the requirements of the law. Okay. So those are the requirements of the law. And so at least you know this ethical. So I've also tried to highlight the ethical responsibilities, what you should do as an accountant. But also it's very important for you to know that we have what we call ethical dilemmas. And ethical dilemmas come in two scenarios where I give you an example of where you are part of procurement, and say your so-called sister or girlfriend is the owner of a given company. If the owner of a given company means that you're in an unethical dilemma. You have to go ahead to declare and say, this is exactly what is happening. I'm conflicted. So another person should be part of this process, okay? There are even times where your manager, your CEO wants you to do something that is contrary with the requirements of the International Ethics Standards Board. Maybe either it's to disclose confidential information or to present information that is not true. Then you are in ethical dilemmas. As an accountant in ethical dilemmas, like I've said, you should disclose, and you should, where you're in doubt, you should be able to consult the Institute of Certified Public Accountants to provide you with guidance, okay? Yeah, and so on. So I wanted to basically comment about these different lines within this introductory topic. We have other sections that are highlighted here. Some of them I've commented about them. This we have been able to speak about it. These have also been able to speak about it. This is also very important. For this specifically, I want you to take interest into what each of these people are looking for in the financial accounting information, okay? We said managers are looking for information to enable them making decisions. Managers are the ones that run the business. So they want information that can help them make decisions on how they run the organizations. So these are interested in the financial accounting information. We have employees. Employees are interested in the financial accounting information because they want to know if their jobs are safe, job security. That is what these employees are looking for. Executives, usually they say the top executives. Now managers are looking at, say, day-to-day running of the business. Executives are looking at the strategic decisions of the business, either expansion, starting up a new branch, entering a new market. All this is supported by financial information. So executives are also interested in financial information. Board of directors, these are usually appointed by the shareholders to run the company. For example, right now, we have the board of directors for NSSF that have been in the news over the operation of NSSF. And they are the ones that call down the appointment of the CEO. So board of directors of any company have the obligation to see how to oversee the running of the organization on behalf of the shareholders. So these are interested in the accounting information for that reason, so that they can give an accountability to the shareholders, but also for them to also be able to take critical decisions about management. Actually, the board of directors supervise the executives, which executives supervise the managers, and the managers will supervise the overall employees, okay? So these are the internal users, and then the external users are here. We talked about investors. Investors already who are investing in the business, they want to see the potential of the business, to see if they can invest more money. And those are the current. Prospective want to see if their money that is going to be invested into the business will yield a return, okay? So that is very important. And then we have connected stakeholders. We have customers. Customers are interested in the accounting information because they want to know the reliability of the business. A case in example, a supermarket will be interested in the financial accounting information of its supplier that provides it with grains, because they want to know, do they have capacity? Some customers, especially corporate customers, take 30 days to pay. The question is, can the company survive if we take less than 30 days to pay? Do they have enough cash? This is very important. Suppliers are those that supply to you as a business. Suppliers are also interested in your financial information, you whom they supply to. Why? Because at the end of the day, suppliers are going to give you items on credit. They can't give you items on credit when you cannot pay. So they want to understand, how is your financial strength to be able to pay back if they supply to you on credit. Banks are usually, of course, banks are your lenders, want to know how you're performing as a business and how if you have capability to pay back interest for the loans, but also they want to understand, do you have any other loans that you have taken that could impede you from being able to meet your obligations? Then we have government authorities, URA, Uganda Securities Exchange, NEMA, and so on. Businesses don't operate in a vacuum. We have regulatory bodies that are concerned, that are interested. URA is interested to see, have you made a profit? And if you have made a profit, can you give us a share of our profit, of the profit, which is 30% corporation for corporate entities. For businesses that are under the presumptive system, like the small businesses, you have different rates for each of the different levels of your sales turnover. So URA is interested in those areas. Then we have the public, the press or media. They're interested in the information, in the accounting information. They want to see, because these are people who are acting on behalf of the public. When there's an issue with your company, they want to ensure they transform the information to the public to make informed decisions. When Umeme's contract was to be not renewed, the media came out and informed the people and said Umeme will no longer operate in Uganda after 2025. Now, any person who wants to invest in Umeme, because Umeme is a listed company, should know that if I'm investing in this company, these are the repercussions, okay, of investing in this company. So you've seen that I've been able to explain each of the different users of the financial information with the reasons why they're interested. So in the same way, if an examiner asks you about the different users of financial information, that is what you should do. Give the name and give the reason why they're interested, okay? This we've also been able to explain to you accordingly. This we have also gone through comparisons. These I've also been able to go through some of these, but just know that this is what we call the accounting reporting framework. All these are bodies that dictate or tell us what to do with our accounting information. So their practice, the accountants, we are governed by these different bodies. We have at least seen the Accountants Act. We had 2012 and then 2013. We have the stock markets for companies that are listed on the stock exchange. Those companies that usually see after business news that they show whose shares have either increased or decreased. Those are companies that are listed on the stock exchange. At least we have seen the IFAC. We've also seen the Code of Ethics. ISPAO as a body also regulates us. the Uganda Revenue Authority, very obvious. Bank of Uganda. Now, Bank of Uganda regulates mostly banks, commercial banks. And that is why Bank of Uganda will request them to have a minimum deposit with the deposit unit, but also Bank of Uganda requests these commercial banks to present their financial statements in the newspapers and also in their websites, even when they are not public entities. They should be able to publish their financial statements. Okay. The International Public Sector Accounting Standards Board, IPSAS. Now, IPSAS relates to the public sector, government. Okay, government and other public sector entities governed by the IPSAS board. Then we have the IFRS. IFRS is International Financial Reporting Standards. And then we have ISs from the International Accounting Standards Board. Okay. And then the other is the conceptual framework. Okay. And the general acceptable accounting principles. So this is also okay. So we'll be able to start from the conceptual framework when we return and be able to look at the different elements within the financial statements and so on. I've given you these notes and I encourage you to go through the notes and be able to conceptualize these ideas even before we meet in the next class. So I want to end here and ask if we have any questions for my friends that are joining this session online. And for those that are joining the session through a recording, you can be able to share your questions on our WhatsApp group. In case you're not on the financial accounting WhatsApp group, please be able to reach out and I'll be able to add you accordingly. My number is 070. As your tutor, it's very important that you have my number just in case. Okay, just in case you may need to ask something, but we'll be able to use the WhatsApp group for communications. But just for those that may miss to be on WhatsApp, I'll just drop my number here, 070380325. In case you're joining in from a different country, you put that code of +256. Yep. 256 +256. And then we can be able to talk. Let me try to make this index so that you can easily see it accordingly. So that is my phone number. We are studying till May. May looks far. For those that are doing the exam in May, it's not far at all. It's nearer. So we should be able to focus and ensure that we are consistent with attending these classes and see how we can pass. Okay. I encourage you, if you have not registered for CPA, please, you go and register accordingly. It is very easy to register. What you just do is just go to the website and click on student application. When you click on student application, it will bring you to a page that has requirements. You prepare these requirements and then you start the process. Say I'm a new applicant, and it will take you through subsequent steps. When you're done with registering for CPA, it is also very imperative that you go ahead to provide, basically make payments, okay? Make payments and register for exams. Registration for CPA as a student is different from registration for exams. You register for exams before the deadline and now get yourself serious, okay? I know that I'm going to do these papers. It's very good for you to do these things when you still have time, because the time is going to reach when you cannot be able to register. So I encourage you to do that accordingly, okay? So I hope that answers a question of one of the person who asked a question here, Innocent, and other people. In case you're not on WhatsApp, please, I'll be able to add you accordingly, and let's see how we can help each other. So thanks so much for joining through, and see you next time. Please make sure that in case you have not been able to be added to WhatsApp group, just send me a message on that number, 070-380-3255. I have been your tutor, Coach Samuel Ibanda, CPA. Thanks so much. Till we meet next time. Bye-bye.